Hello and welcome to our three-part series, Future of Global Trade. Without doubt, global trade has undergone dramatic changes over the last 3 decades. What were once underdeveloped economies are now the engines of global economic growth. Countries in the Southern Hemisphere have not just become more important trading partners for the developed countries in the North, but they're also trading more and more among themselves. And this trend will only grow in importance. Part 1 of this episode will focus on the specific shifts that are happening in world trade and what sort of opportunities and challenges they're throwing up for businesses. Part 2 will deep dive into the India-China trade corridor, and the final part, Part 3, will examine emerging opportunities in Latin America. Let's start today's discussion on emerging trade routes with the eminent panel that we have here in the studio. Let me start by introducing the panel. To my extreme left is Anish Chakravarti, Senior Director and Partner, Deloitte Touche Tohmatsu, India. Susanto Banerjee, Executive Director and Head Finance, Mylan Laboratories. To my right is Gopal Shah, Treasurer and Managing Director, Financial Services, Cargill, India. And James Emmett, Global Head of Global Trade and Receivables Finance, HSBC. So James, let me start the discussion with you. You just come out with a report which talks about how the global trade scenario is going to pan out by 2013. So give me the big headlines that have come out of your report.
I think there are 3 key headlines that come out of this. The first is, as you rightly point out, a very rapid development of the South-South trade corridor. But that can be characterized by the move up the value chain of a number of countries, particularly in the emerging or faster growing markets, whether that's India, whether that's China, or a number of other markets around the world. The second thing to come out of this report is that for developed markets, they're having to understand what their competitive advantage is and continue to innovate and diversify. And the third is the importance of hubs, global hubs, whether it's Singapore, Hong Kong, Dubai, or otherwise, where a lot of business is being done through connections being made. These themes are all coming out and are really supported by those macroeconomic themes of the very significant growth of middle class, particularly in the emerging markets.
Right. So we're not just talking about the volume of trade increasing, but we're also talking about the nature of trade changing itself. So companies that are at the low end of the value chain moving up. So Gopal, now you are working with Cargill, which is one of the largest trading firms in the world.
Right.
So to your mind, how has global trade changed ever since the financial crisis of 2008 hit the world economy?
I think there is a huge trade patterns emerging in the emerging markets, and that is directly correlated to the growing GDP, the rise in the middle class, and the changing consumption patterns in the emerging markets. That has also created other issues relative to pressure on infrastructure as well as in the environment. But I think it's a positive change which we have seen over the last few years in terms of growing trade as well as changing patterns.
So, if I, Susanto, talk about global pharma industry, especially your company, the decoupling has, of course, created new opportunities for global drug makers. There are, emerging markets which are not just huge consumer bases, but there are also suppliers of API, which is bulk drugs, and also centers for research. So, from Mylan's own example, how has this whole shift in global trade turned into corporate strategy? You made an acquisition in India some years ago. So, how do you see this now panning out going ahead?
If you look at certain data points that if you look at the future birth rate, and pharma is all about treating people, right? So essentially it's, if you take the entire population of the world as about 7 billion population,
Right.
Growing population, and you know where this population is growing, you will see that the growth is more in the emerging markets than in the developed markets. If you look at Europe, for example, right, over the next maybe 15 years, the growth in population will be so insignificant that the focus of it is bound to shift to, I should not use the word shift, the focus should add to the emerging markets as well.
Right. But Anish, the other thing which James mentioned was about how the developed economies, which have so far been exporting to developed markets, they will probably now need to move up the value chain themselves. So what sort of evolution that you think they're going to do, for example, a US or a Germany, to stay competitive with a China or India, which themselves are again moving up the value chain?
Absolutely. Now, there are a couple of things which I think support James's view. And interestingly, I'll take India's example from a macroeconomic perspective. Over the past 10 years, we've noted two major shifts. One is the geographic shift from India's perspective. Typically, India's largest trading partners were the EU and the US.
Right.
That is not the case anymore. EU-US trade has roughly fallen from about a 25-23% down to about a 13% closing December 12. On the other hand, trade with Asian countries has risen from about a 22% to close to a 30%. And that shows really where the focus is shifting. The second aspect is the basket of trade itself, which has also changed. Traditionally, India's trading, let's say, key products were gems, jewelry, and items such as those. That has moved, and what we have now is machinery, transportation equipment, capital goods. That's a stark contrast with what India was 10 years back. And I think from a developing country perspective, these things need to be noted clearly, because if your competitive advantage vis-a-vis a country such as India is typically eroding away over a 10-year period, clearly the vision on the competition itself needs to evolve.
Right. But James, as Apple famously says on its products, designed in California but made in China. So obviously, the companies which are based in Germany or US are not just going to give up on the fight. They're going to start manufacturing out of these low-cost destinations. So how do you see them responding or tapping this opportunity?
Well, I think that's a critical point that comes out in the report, which is how do you further innovate? It's not necessarily a negative situation. In fact, I think it can be a win-win. So whether it's Germany, whether it's United Kingdom, whether it's United States, it's identifying what does the brand of that country mean, and actually how can that then be utilized, not just in the innovation, but to export to those faster-growing emerging markets. As we rightly discussed, the growth in Europe has been very low and indeed is forecast to be very low, but there was overall very significant global growth last year, particularly driven out of Asia, and we mustn't forget that. So I think the developed markets are having to think about how do I tap that, but it does mean making sure that the products are relevant for the market and that they are continuing to innovate. It can't be a situation where you're standing still. Importantly, for the emerging markets, I think it's also critical to understand that there are significant opportunities across the board. So there's this whole concept of the middle income trap. Can you get stuck? Well, actually, if you understand what your brand is, what you're trying to sell, and you're not simply focused on the developed markets, but particularly if we're talking about India, looking perhaps east into ASEAN, into Asia wider, what does the brand actually mean, and how do you differentiate, hooking on to the significant growth that you get in those markets? So I think there is a win-win situation out there, but it does require countries across the board to recognize that people are moving up the value chain, and that does require a differentiated approach, particularly thinking, what does the brand mean, and how do I make myself relevant for that market?
So companies need to understand the relevancy of their brands in order to stay competitive in the global marketplace. So on that note, let's take a quick break.